Hey everybody, Scott Cole here from the Futures Trading Academy, and I just wanted to take a few minutes to follow up on our last video, which just demonstrated some simple strategy testing here in the Trader Studio software program. In the last video we showed a test of just a very standard basic 20-day breakout strategy where you enter long when the market makes a 20-day high and you enter short when it makes a you exit the long and then enter short at a 20-day low. Now what we've already done is we've tested turtle system number 1, which is simply a system where you buy a 20-day breakout to the upside or you sell a 20-day breakout to the downside, and you exit the trade at 10 days against. So if you're long, you're going to exit at a 10-day low. If you're short, you're going to exit at a 10-day high. And then we use a stop loss of 2 times the 20-day average true range. The interesting thing about this model also is that it doesn't take every single 20-day breakout. It'll skip a trade if the last breakout resulted in a profitable trade. So the idea is that after a significant trend, the market needs to consolidate, and it's going to tend to chop around a bit before it embarks on a new trend. So with that said, we've already done the testing. These are the results of just trading one contract at a time. And now here's our total results employing the money management algorithm as well. So we're testing $1 million portfolio. We're risking 1% of our equity per trade, and these are the results. So basically not all that impressive. Here's our annual returns. So we've got a bunch of losing years, and really the system performed pretty poorly over the last few years. And then here's our equity analysis, where we generated a compound annual growth rate of just 3.8%, and our max drawdown is 50%. So this is the problem with basically just buying a system or learning the rules of a particular mechanical trading system and then following them blindly because someone told you it was a good idea. What you need to do is test your own ideas out. The turtle trading system, this particular system performed very well in the 1980s, and I'll actually demonstrate that for you in a couple minutes. But what I also wanted to show you is the possibilities from doing your own research and your own testing. So what I've done here is, with $1 million portfolio, I have 4 different models trading all at once, and basically on a total number of I think 25 to 30 different markets. And here's my total net profit, $22 million, compared to the $670,000 in the turtle system, and I still have open position equity of over $13 million. Here's my annual returns, profitable basically every year, and a compound annual growth rate of 28% with a max drawdown of 30%. Now this doesn't mean I would want you to go run out and try and buy this system from me, but what it does mean is that you can test your own ideas. You need to do that in order to develop the confidence to follow a system when it's going through a difficult period. So as you've seen, this market already this year is down 8%. Well, there's been other years where it's been down and then recovered significantly. So for example, here's the drawdown report. So you can see I've got drawdowns ranging from single digits to near 30%. Here's how long they've lasted. So the worst time period was about a year, where I went through a period where I was down 30%. And that's off, that's not off closed equity, that's off open equity. So those are the peak after unrealized gains have occurred, when a market has gone straight through the moon and it starts to pull back. This number reflects that. But you can see by this equity curve then that we've recovered every single time from those valleys to make new highs. And that's the beauty of a trend following strategy, is the compounding of the annual gains. So what I want to do now real quick is just show you how this turtle system performed back in the 80s. So we're going to go ahead and run this, but we're only going to run it from, I think I go back to there, 1979 or so, and then we're going to go to 1990. Same system. This will take a minute for it to run through all that. I'm going to pause the video until it's just about done. Okay, so this test is just about done. So here's our total results there. And now we have to run the trade plan. And we're going to run it from there to there. So as you can see down here, you can see that the software is running, and we're going to pause until it's just about done, and then we'll see the results. Okay, so we're just about done with these results, and there you can see how much profit we have with that turtle trading system. Here's the equity curve, but let's go back to these results. So we basically made $29 million in total net profit in that time period, with still $12.5 million in open trade equity. Let's look at the yearly returns. So you can see, and we're risking again 1% of our equity per trade, starting with $1 million portfolio, 47%, 40%. Now the time period where the turtles were being traded by Richard Dennis and William Eckhart was, I believe, 1983 to 1988 or 84 to 88. So, and they were noted for generating huge profits for them, and you can see how well the system performed back then. And the compound annual growth rate at 50% with a 43% drawdown. So you can see it was still pretty volatile, but the returns were pretty amazing back then. So the system performed wonderfully back in the 1980s. It hasn't performed quite as well, or nearly as well, really in the past 15 years. And while this is still a wildly popular system to follow, it makes no sense to follow it blindly until you've done your own research. So use it as a base to start developing your own systems. That's pretty much what we teach our students to do at the Futures Trading Academy. So to learn more about what we do and our trader training program, please visit us at thefuturestradingacademy.com, and we'll look forward to seeing you there. Thanks for watching.